We have Stephen Bartrop, who's the director of Breakaway Investment Group, and he joins us from Sydney. Stephen is also the managing director of Lime Street Capital. Good to see you once again, Stephen, in the new year. Let me just point out for our viewers that your fund has actually more than doubled and is among the top performers down under, which is beating the ASX 200 index by 70 percentage points. Some pretty hefty returns. Stephen, I'm sure you're pretty happy with that. Let's get to your outlook on BHP and Rio Tinto. We're still waiting for Rio Tinto's results. We had BHP yesterday. Let me just ask you what you thought of those numbers and if you're keeping your recommendation on the stock at a hold.
Look, we're quite comfortable. It was a great result. It was probably 5 to 10% above market expectations. But I think, there was no surprises that came out, in that result. There was solid iron ore production. There was a good pricing structure for right across the commodities. And it does reflect the improving commodity prices, for the LME-based metals over the latter half of 2009, but also the tightness of the bulk commodity markets that we're now experiencing. So I think overall, investors went away quite pleased with the result and felt, the company was on track to do certainly well this year.
Yeah, okay, so let's talk about the share price then. BHP didn't get much of a boost from those numbers yesterday. Your recommendation, actually, pardon me, the analyst recommendation on our Bloomberg terminal, at least the average survey of analysts is calling for a target price of 46 Oz for the stock. It's trading at $40 plus. How do you see things playing out for this stock for 2010?
Look, we would agree with those sorts of target prices. I guess from our perspective, we're a bit unlike other brokers. Well, certainly we're not a broker in terms of the research department, whereas a hold basically says to investors, hold the stock because we think there's more upside, as opposed to perhaps other brokers that may indicate there's a hold is almost a sell, or a polite way of putting on a sell. So we've introduced BHP to our investors back at the $25, $30 levels. So the fact that it's $40, we're basically saying, look, we're pleased with that result. We expect BHP to continue to move forward at certainly higher prices. This is the time to keep. If we felt it was overpriced, we'd certainly have a sell. So I think probably if you take the context of what a hold is from a stock resource research perspective, it really is a genuine hold.
And Stephen, which segments of BHP's business are you most impressed with? Because we're still waiting for pricing to be done for those bulk commodities, such as iron ore, and those negotiations to be done. Also, copper was a big play last year. But which segments of BHP are you most impressed with, and are you looking for growth in?
Look, we are looking for growth, but really if you break it out, it was basically a third energy or the petroleum business, a third base metals, and a third iron ore. Where the encouragement really came from, and this is certainly going to be reflected in the Rio Tinto result tonight, is the iron ore, where essentially CEO Marius Kloppers was basically indicating that they received about 8% above the benchmark price in average because they're moving to these short-term contracts. And certainly this is likely to apply to customers that potentially defaulted when the spot price fell below the contract price earlier last year. But essentially what that is doing is, with a very tight iron ore market at the moment, you're seeing the spot price move up, and that is, or BHP is reaping the rewards of that above the contract price. So tonnage-wise, both companies are churning out iron ore as quickly as they can. The demand's certainly in China and elsewhere, and we've got some good pricing structure going with those commodities.